Have you ever wondered how your neighbor, the one that doesn't work anymore, still drives a fancy car, travels when they want, and tells everyone that they're living off their investments? Now, here's the truth. He's not lying in entirety, but he is not telling the full truth. And today we're going to break down how that millionaire life can really live off dividends when a majority of individuals can't. I want to break down the math, show you the hidden reality of these dividend portfolios, and steps you can actually take to get there without falling for all this hype. So let's go ahead and get into it. So, what exactly does it mean when an individual says they're living off dividends? Really breaking it down, they own stocks in their portfolio that pay a return or pay a dividend, and they have enough money within this ETF or these stocks where they are getting cash payments alone to cover all of their living expenses without selling the portfolio, without selling the shares. This is actually living off dividends. And a majority of companies do this every quarter. Companies will send out dividends, roughly 2 to 5% of your investment per year. So you can live off those payments and you can be completely financial free. Sounds super simple, but the math tells an entire different story. We see a lot of videos when it comes to YouTube. We see them on TikTok. We also see them on Instagram talking about living off dividends, having passive income, but they don't talk about the generation of how people got there. So let's say on the average salary, you want to make, and you're really focused on $60,000 a year in dividend income. So what exactly do you need to hit that 60K mark? 3% yield, you need $2 million in a portfolio. Now, I don't know about you, but I do not have $2 million in a portfolio to get that 60K a year to live. If you look at a 4% yield, 1.5 million, even at a 5% yield, 1.2 million invested, will get you to that 60K. Now, we use these numbers because when you start thinking of hypotheticals, 3 to 5% return is about average. I know there is a lot higher ETFs, a lot of ETFs that contain a lot more risk that are paying a lot higher return. So to live off of dividends alone, again, just kind of keeping more of a safer pace when we look at this, $1.2 to $2 million to be completely invested. And that means also taking the dividends out of the portfolio every single year. That is not small change. You are talking years of savings, years of investing and compounding to get there. And this is where most people hit the wall. So how exactly can you do it? Now, it is not by accident unless you're built with a trust fund. There are really 5 key ways that you can live off dividends. First one, you build a huge portfolio. We're talking a million, 2, 3, 4 million. Even a modest can produce a full-time income. Incredibly easy if you're looking at that amount. Now, they've been doing it for decades. We have seen this compounding dividends over 20, 30, 40 years can absolutely grow these portfolios to that size, and focusing on quality and growth. We are not looking at the high yields. We are not focusing on investing everything in those yield max, owning strong companies that raise the dividend, thinking of something like the VYM, thinking of something like the SCHD, protecting their income from inflation and really outpacing it, and also living below their means. This is what I feel like a lot of people are kind of missing, meaning maybe you only need 50K a year to live and you're generating 60K a year. That is crazy because that gap, that extra $10,000 is going to give you the financial freedom that people are looking for and being able to live the lifestyle that you really want. And number 5, multiple income streams. This is important. I feel like a younger generation is really missing out on the income streams. When we think of pensions, side business, real estate, all the reductions, and really they reduce pressure on the portfolio and the ability to generate additional income. In short, you can live off your income because really you've scaled that portfolio, you had patience invested in the market, and you have other income that is backing it up. So why and where does the fantasy fall apart for a majority of investors? First of all, if you're like me, you probably don't have millions of dollars invested, but that's okay. If your portfolio is at 100K, 200,000, a 4% yield gives you $4,000 to $8,000. That's not replacing your paycheck yet. This is where the compounding aspect, because when you look at higher yield, usually means higher risk. When we see those ETFs that are offering 8%, 10%, 60% that we see online, many of them, when times get tough, will be absolutely cut, or worse, it is NAV erosion that we're seeing with a lot of them. Then you have to remember with dividends, if you're making that 60K, you still have to pay tax. If it's not in a tax advantage account, you're going to be required to give Uncle Sam or the IRS their portion before you ever get to see it. And then there is inflation. Even if your income covers you today, inflation could go ahead and eat away in the future value that we see in the portfolio. And of course, focusing only on dividends can cause you to ignore growth. This is the reason in my personal portfolio, we dropped out of the SCHD because we needed a lot more of a balanced portfolio, really the income and the appreciation versus focusing on the income. And of course, while living solely off dividends can be pretty tough unless you have that $1 million portfolio, it is definitely reasonable. So, how exactly and what separates your neighbor from the average investor? Now, of course, big things here starting early. Decades of compounding are going to make a world of difference when it comes to your portfolio. Saving aggressively. For me personally, I put about 50% of my income into investing. That could also mean living frugal for years, investing money where we would others spend it, and of course, not keeping up with the Joneses, even though they are our neighbors, or allowing lifestyle creep really to come in. Now, they kept invested through market crashes. That is what I did. Instead of panicking every time I see a pullback in the market, to me, I treat that as a buying opportunity, reinvesting those dividends, really buying more assets. And it almost gets to the point for me personally where it is about the accumulation of assets. Been a focus about the last 10 years that I'm not too worried about the things that I own. You know, I have a house, I have a used vehicle. I'm not too worried about buying new vehicles, having a $600, $700, $800 payment. I would rather be able to invest on a regular basis. And of course, to manage your expectations, not living super flashy lifestyles, living really sustainability versus having that flashing lifestyle. It is really the gap between them and you is an intelligence, it's time, scaling, and discipline when it comes to investing. So, how exactly can you get in there? Because I love this part because it gets back to us, it gets back to you and me. You might not be able to live off dividends today, but you can absolutely start building this portfolio for dividends in the future. Step one, get a clear target. If you need 50K a year, expecting that 4% return, you're talking $1.25 million. That gives you a goal to work at, getting that 50K a year. And then, of course, even if you give it a couple more years to compound, it is going to grow like crazy. Focusing on dividend growth, not just yield. There are companies that regularly raise dividends consistently, like the dividend aristocrats that we've seen, help your income grow faster and really fend off inflation that we are seeing every year. And then, of course, reinvesting everything during the building phase. So you might have 20, 30, 40 years of this building phase, building the portfolio, not only for dividends, but also from growth. Every dividend you reinvest could become that mini income generator. It is the way that you have to see it. It is the way that you have to treat it. Now, of course, when it comes to portfolios, diversification, and using index funds and ETFs, I always do. If you want to get into real estate, I do not want to be a landlord. I would invest in some REITs, but looking at side income, just like we're generating right here on YouTube. And if you haven't subscribed to the channel, definitely subscribe. And then the final one in here, being patient. Time in the market beats timing the market, especially when it comes to dividends. Even when the market is coming down, a majority of these big blue chip companies will continue to pay dividends, even if the stock is falling. Now, you can't fake compounding. And really, if you give time the ability to make it work, it will work faster and a lot faster than you think. So yes, your millionaire next door can absolutely live off dividends if they have a $2, $3, $4 million portfolio. It's not magic by any means. It is math in its entirety. The ability to build wealth patiently, staying invested, let time with compounding do the heavy lifting. If you're taking the same approach, really focusing on steady income, growing your income and smart diversification in the market, eventually you'll join them as a retiree. If this video really helped you see dividends in a new light, hit the like button, subscribe to the channel for more financial freedom strategies, and drop a comment down below. How much do you need in annual dividends to cover that annual cost? And I'll see you in the next video.